This help video studies the correlation or trends disconnects box located in the Trends tab of the matrix. This is an important box that I often cite in the VIX reviews that help discuss or help reveal when a market's underlying trend, whether it be up or down, is vulnerable to an unexpected change. There's really two major trend disconnects that we follow in terms of the stock market looking for a timing technique. It's the S&P and VIX correlation and the term structure correlation. There's also the US dollar and gold correlation, but that has to do more with following confidence. And it's something that when the dollar, which is normally inversely related to gold, tends to move with it together, it suggests that confidence is breaking within the system. But the S&P 500 and VIX and the term structure is more of a timing tool for the S&P 500 or the broader stock market. Normally, the relationships which are defined by the 10-day, 10-day, and 4-week and 4-week. The 10-day is the one that we focus on the most because it moves the quickest. Normally, the relationship is in a trending position. The computer will define it here and here, whether it be for the S&P 500 and VIX or term structure. It's normally trending. When it starts to decouple, the normal relationship has been broken, and it suggests that the market is falling out of gear, or as the title suggests, the trends are starting to disconnect. So let's take a look at those graphically for a moment, and then we'll close out this help video. You can click these links here, and it'll pull up charts similar to the ones I'm pulling up here, and you can get an idea of what it looks like. Normally, a traditional correlation relationship between the S&P 500 and the volatility or VIX index is down here. It's pinned at -1. When it spikes, the unexpected tends to happen. The unexpected could be at tops and turns. The unexpected could be a change in a decline in the opposite direction. At times, they show up and the market doesn't always react. Say it hits here or here, and the market curls off temporarily, but it chugs through. That does happen. So what these trend disconnects suggest is that there's at least a short-term disruption. Oftentimes it marks a bigger decline that's coming, especially after a trend's been up for some time. But it's difficult to know if it's going to translate into a longer-term decline. The bigger the spike that you see here and here, the more problematic it is. When I change the computer to highlight zeros, you can see the big spikes often correlate to some type of short to intermediate term dislocation. But it doesn't always take a big spike to generate a decline. Even a small spike here can turn the market down quite a bit. That's the S&P 500 to VIX. The term structure correlation works in the opposite direction. The normal relationship is usually 1, and when it deviates from that and turns negative, there's a problem, and that problem is better seen by bigger spikes. But in general, the big spikes tend to show up when a market's ready to curl over. But they don't always have to be gigantic. They can be minor in size, and it can send the price down. The real warning here is when you see these spikes, whether it be in the term structure or the S&P 500 and VIX relationship, any spike in the correlation index is a problem. And it shows up here by being highlighted yellow. We talk about them in the VIX, so keep an eye on these trend disconnects over time. I've moved them from this location over here so they have a more prominent view within your weekly, whether it be daily, weekly scan of the matrix. It's an important relationship that often plays a role in short-term timing of the broader stock market. I've also included the breadth and participation numbers here by the NYSE advanced decline line and new high low index. These are things that are just general creations. This is my creation. This is something that's widely followed. It's just for convenience. I put them in here so you can more easily find them. So that's the trend disconnects or correlation section or box down in the matrix. Be familiar with it. If you have any questions, contact me directly. Don't hesitate to ask because it plays a big role in taking profits and sometimes adding to positions, especially when you're trying to time the stock market in these columns, any of these positions here. If you have any other further questions, contact me directly at the blog or go to the blog and search for further discussions within the help sections there in the written form. I encourage you to watch more videos, and thanks for watching.